Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 21st of March. It is the spring equinox. It is the Iranian New Year, which may be an appropriate place to start. Brent crude oil is trading this morning at a little, again, continuing its climb up 0.5% this morning, 72 and 34 cents. WTI about $4 behind. Ultimately, this Brent price moving and further up the 70s. Let's kick off this morning. We got a great geographic spread here. Everybody at the table this morning has a bit of red and blue in their flags. I wonder what that's all about. Thank God that's not the case. We no longer have those colors in our flag. That's all I'll say on this very good day. Andy Critchlow, Global Head of News, S&P Global Commodity Insights. We were digging into the archives this morning, Andy, to figure it was Andy actually on the first podcast 5 years ago. And I think it's still unconfirmed by the archives, but I think you were, or there or thereabouts, if not by a day or two. It is the fifth birthday of this wonderful podcast. So great to have Andy sort of bookend those two. And obviously, Peter and Brian have been with us on the long journey as well. But Andy, let's kick off with you this morning. Price continuing to move up. Is this all about Iran and the big maximum pressure clampdown?
I think there's a couple of headlines that go along with that. I mean, of course, the maximum pressure story around Iran is important. One interesting wrinkle to that story I thought was Sheikh Tahnoon's visit to see President Trump. Sheikh Tahnoon obviously
The
runs
nice
essentially
sunglasses.
the wealth of Abu Dhabi through his chairmanship of all the sovereign wealth funds and investment vehicles. But he's also head of security, and he's been one of the main intermediaries in terms
He's
of
been
Abu
to
Dhabi.
Iran a few times as the head
Uh,
of security in that capacity.
He absolutely has been to Iran a few times, and so his visit to see President Trump and what was discussed in that meeting, in the context of this tightening of sanctions and the recent action against some of the teapot refineries in China, um, I think is significant, and I think we'll probably hear more about that as things develop. Interesting story as well, actually, that we reported out of the US on the US possibly shifting its focus away from the rhetoric around $50 oil. Interior Secretary in the US, Doug Burgum, gave a press conference after a meeting with US oil executives, and basically said that the focus isn't really on oil prices anymore. Previously, the administration was very much focused on we need oil at $50 a barrel, and we need lower oil prices. Now the focus seems to be on we want to get people drilling more, and whether that's permitting in Alaska, whether it's just making drilling more feasible. But it's this rhetoric that shifted again away from $50 oil. Now, of course, in terms of the administration and its key alliances in the Gulf, that would be welcome mood music. I don't think anyone in OPEC or in Saudi Arabia or the UAE, the major oil producers in the region, kind of wants to hear the US really pushing down on this message of $50 oil. And then we have these OPEC compensation cuts, which really kind of balance out the the oil that they're expecting to return to the market
At least
in
in month
April.
one, right? In
Yeah,
April, it's what,
absolutely. So
150,000 barrels
yeah,
or something.
what you give back, what you give back to the market, you're taking back as well. So that's very interesting, and it all adds to more volatility, and you can kind of build the narrative of why we're getting slightly higher prices this morning.
Brian Pieri, founder at Energy Rogue, there's that famous photograph or video of many years ago when the seven or eight CEOs of the tobacco companies in America lined up in front of Congress and sort of denied that smoking was addictive or whatever it was, but it still lingers out there in the internet land as quite. I thought of that when I saw the seven or eight major oil company CEOs roll into Trump's office this week. Did they get anything out of him? I mean, I think the basic message was, listen, mate, we're not going to be drill baby drilling if you keep trying to drive down prices.
Well, I mean, the fact of the matter is that thank you, Sean, and thanks for having me on the fifth anniversary. Do we get to sing today?
Well,
I'm
we
just
can
curious.
certainly try. Andy's got a great voice, so he should probably do a solo. And
Okay,
then
all right, we'll queue up Andy for a
Peter can
solo
do
a
the
little bit
bongos in
later.
the background on the beach or something.
Okay, I like that. Well, listen, we talked about it on one of the previous podcasts that the policies that Trump put into motion during his 2016 presidency, the drill baby drill, really did nothing to really drive production up or down. In the US, it's really going to be driven by economics. And the past 12 months, we've been 10 to $20 higher, and we haven't really been adding to our inventory of drilling locations that we could go into. So the fact of the matter is that I don't think anything on the table, such as opening up Alaska, is really going to move the needle. It will 3 years down the road or 5 years down the road. These are when these moves would come into play. But anything inside of 24 months is really going to be economically driven. As a matter of fact, that's one reason that I hold an opinion about his tariff talks with Canada and Mexico, and I think it's incredibly misguided, especially with the trade partnership of us importing the United States importing 40% of our crude oil from Canada. I think it's just a misguided move. So I think he's slowly realigning a lot of relationships, and some of those can be moved in positive directions. However, it's starting off with a very negative sphere of influence right now. When we
It looks like
look,
Chevron got a big win out of the meeting, at least some reporting indicating that he's looking to reverse the decision to kick them out of Venezuela.
you know what, every day I come in and there's a reversal
Yeah,
on something he
yeah,
said
yeah,
yesterday. So I kind of fall in the maybe.
yeah. I mean, it
Let's
sort of had a
believe it.
good argument about it. Well, if we leave Venezuela, the Chinese will just jump into our space, 250,000 barrels a day. Thank you very much.
Well, and that's part of the whipsaw that is rattling not only the oil markets but also the equity markets because he's moving things and he says this about, oh, we're gonna get out of Venezuela, and then, well, wait a second, maybe we'll won't, and so it flip-flops. I mean, what has this been, 60 some odd days? So
Yeah. I wonder
60
what the
some
flip
odd.
flop will be if there will be one on the Iranian sanctions. That might be interesting because there is a 2 month letter D-Day kind of into Tehran that is meant to be is there a pathway to some kind of coexistence between Washington and Tehran, and that clock is ticking on that. But meanwhile, out in the wild outpost of Peter Maguire, CEO, Australia Trading.com, Peter, we've talked here with Brian and Andy a lot about the control of supply, the restriction. Build, drill, baby, drill isn't going to really do it for now, at least this year. OPEC Plus keeping things tightened in. Where's the demand side out there in your wonderful part of the world? Is China got a pulse there? Is demand in Asia going to sort of come in to save the day this year?
Oh, good morning, Sean. Happy birthday! And 5 years is such an wonderful achievement.
And we just recently went through, as you know, the thousandth podcast of this show about 2 weeks ago, I think. So fifth birthday, thousand podcast plus a few.
Not
Great to
bad.
have you guys here.
Well, it's well regarded on the global space. So, where's it going, Sean? I think that the overall consensus. You look at the China, India, and of course Asia. You've just got population base, and there's only going to be one thing, and that's going to be more consumption as years go through. Are we going to see a big turnaround? I'm thinking maybe you've got to see a big bazooka for China for internal demand, and the issues that that's going to play should April 2 and the tariff situation really gain, I think, traction, and it's going to get, and it will. There's no doubt about it. Impact if you look at the companies in China and how they'll either sit on their hands and just view the landscape, or they'll make that positioning and go back to the US. So that's all got to work through, and the impact that's going to have naturally to China and its economic growth itself. So yes, I think there's going to be growth. Yes, I think it's going to continue, as we all know, but I think it's going to be a patchy year because leading on from Brian and what Andy said, as far as the unknowns with President Trump, where it's very hard to appreciate or understand what's going on. If you listen to the likes of Howard Lutnick, Commerce Secretary, you listen to the likes of Scott Bessant, Treasury Secretary. I mean, there's just so many moving parts to this whole equation, Sean. And it's just, all I'll say is this: I think it's going to be a very volatile year for pricing moving forward.
Andy, coming back to the OPEC Plus compensatory oil cuts, they released yesterday the new schedule. The idea that those who have been overproducing will now pull back to try and get into alignment with what their sort of agreed quotas are. And so they've got to compensate for violations earlier. Should we believe that? Is there something in the box here that says, oh, this time I'm serious?
Yeah, I mean, I think it's all about economics. Although, economic growth in the Gulf with the major producers is relatively healthy, Saudi Arabia well above 4% last year and expected into this year. And that's with, very tepid oil prices at around $70 a barrel, fiscal break evens, is always a point of debate. But I think that it's very hard for anyone to argue that at $70-80 a barrel, things get pretty tight in terms of, balancing spending versus budgetary income in these economies that are, let's be clear, very dependent on oil exports. So price is going to be key ultimately, and balancing the market. The two go hand in hand. OPEC has very much emphasized this strategy of balancing the market, balancing supply demand, is very much focused on stock levels. Price is a function of that. So, yeah, please.
I was just going to follow up with the news of the day that the reasons why we're seeing this climb up in oil price, Brent consolidating into the 70s, is also U.S. sanctions on a Chinese refinery that's taking in Iranian crude for the first time. Your thoughts on that strategy, but also in the context of the more weaponization we see of the U.S., a bit like weaponization of the U.S. dollar over the last few years. Now we've kind of a greater weaponization of crude oil trade. All of that clearly must result in China just looking at buying less of the stuff, getting less dependent on imported oil because of this global ability to constrict it. Your thoughts on that outcome from these sorts of sanctions, the weaponization of oil, and as a result, those that can will move away from it?
I think this is one of the big concerns and is one of the big narratives that will play out over the next 5 years. And in fact, actually, in some of the conversations that we heard at Energy Week in London a couple of weeks back, it was around has the market for refined products, specifically transport fuels in China, now peaked? Which, if it has, is quite a startling fact to kind of frame the conversation here, because China, let's face it, over the last 20 years has absolutely been the biggest driver, along with India, for global oil market demand and growth. And a lot of the expansion plans and the developments around upstream have been predicated on keeping that Chinese economy supplied. So, if we are looking at, kind of peak oil scenarios in countries like China, major demand drivers, then that does have a major implication, because what's going to replace it? Is India going to replace it into the future? Certainly, if you look at OPEC's long-term market outlook, they see India as being the top growth market for oil going forward beyond 2030, 2035, and into the future.
Well, you certainly see the interesting thing, I think, in China, from the just point of view of the energy mix, as this sort of theme of moving away from oil, not because of transition reasons, not because, but because of the security that we're seeing a big increase, continued growth in the import of coal from the likes of Indonesia and other places. Brian, let's look a little bit at natural gas prices in the US at the moment, because of course that seems to be the big golden goose, the LNG exports and so forth. We saw US natural gas prices fall on Thursday, yesterday, after the EIA reported a larger than expected inventory draw. Just intersecting all of that with the sort of global LNG commitments and expectations, does the US, is there anything there that starts to threaten the investment cycle into all of these massive multi-billion-dollar projects?
So what's interesting about LNG, and a little side note, right now in the United States, we have roughly a $4 commodity, or $4 per MMBTU decatherm, whatever unit of measure you want to go with. And 10 months ago, we were at $2, and we were struggling to stay above $2. But we actually have been communicating with our membership and really saying we're going to see $4. It may happen this winter if we have a winter. Now, relative terms, when you look at Europe and when you look at Asia, the relative price is $14 on a unit by unit basis. So it's $4 to $14. Now, when you look at the Asian demand on LNG, the demand side of the equation is saying that's too high. We can't really grow too much of our gas demand at a $14, so that needs to come down. So that either means that there's going to be some shipping compression, or there's a realignment that is also happening because of the trade and tariff discussions. China actually reduced 40% of the LNG imports from the United States as a direct result of these tariffs. So this is realigning things. Meanwhile, Trump is undermining some of the relationships with Europe long term, and that is actually pushing them closer to Qatar, which is making a very big push to send oil and natural gas to Europe. So we're seeing a realignment when it comes to LNG. And when we come, if we went back 12 months from now, the alignment was pretty stable, and now it's very unstable. So seeing that alignment play out in real time is going to be very fascinating, because the fact of the matter is that the world needs more LNG to fuel growth on the electric power side. And when you look at the, as Andy was talking about, with India growing, they need to get into transitionary fuels, because they are still utilizing wood in some cases, and some other inefficient means of electricity. Natural gas is going to be a key component of that, and that is going to be a big part of the future. But seeing where the U.S. is going to send that to over the course of 2025, I expect to be big changes. And another reason that U.S. prices have been up is because of reduced imports from Canada, which roughly 6 to 8% of the U.S. supply base comes from imports from Canada. And because of the tariffs, that actually, it basically lifted the price some. So you probably have about a 10% lift right now.
Peter, I wanted to drill a little bit into local Australian politics, just to understand there is an election that's about to be called, has yet to be called, but it will be, sooner, in the second quarter sometime. It was meant to be in April, or the expectations in April, now looks like in May. Is this a significant election? Is there a lot at stake here, particularly sort of intersecting that with these massive shifts in Europe and the sort of crack between the Europe and the US in terms of defense and security and so forth? Australia, of course, is at the end of that string. How is all that playing out in this election?
Well, even to the point of Ukraine, Sean, and there was rumors in the last week or two in the press as far as having Australians on the ground there. So there's the first part of it. The second part,
fighting the North Koreans, is it?
Yeah, probably. Yeah,
they're there too.
Exactly. So, first off, yes, it is a major election, because, like any election, 26 million people, and there could be a change of government. So that's fairly major. Secondly, we're looking at, as far as economic growth, the country is certainly it's rebounded, but you've only got to look at interest rates, you've only got to look at unemployment and the cost of living, and certainly you've got to look at if you look at the Aussie dollar at 62 or 63 cents, Sean, used to be trading at 70 or 75. It's under massive pressure. So there's a certain concern there, of course. If you look at the candidates, I would think that Albanese, the Labor leader, the current Prime Minister, the incumbent, hasn't done a lot of favours in the market. And this is going to be interesting how he polls and whether he's got the legs to get over the line, which I doubt whether he has. And it could easily go to the Liberal Party, which is under Dutton, or Greens or Independents. So who's holding the power base? Again, that's just got to be examined on election night, because there is a lot of water to pass under the bridge, considering, again, US tariffs, what impact that's going to have to the likes of Australia, and where does Australia sit itself from a economic model moving forward. We're aligned with the states.
Is this an active debate? I mean, in Europe, I know it's like the barbershops are talking about what's happened. In Australia, is this sort of fracture a significant point of discussion?
It's on Talkback Radio, but I don't think it's got the sort of legs that the man and woman on the street, I think, have got other things on their minds, Sean, as far as
you haven't had your Trump tariffs yet coming your way.
Although, if I could just jump in there, I think that you make an interesting point there, Peter, and a sort of anecdotal experience I had recently. I was down in New Zealand last week, and I visited the largest cattle market in South Canterbury, which South Canterbury is a part of New Zealand that you could describe fairly as being the milk churn of the world. So I was at Temuka Sales, 70,000 cattle it handles a year, 300,000 sheep at one of its weekly auctions. Place was full. A lot of people trading cattle. Everyone was talking about Ukraine, talking about tariffs, US tariffs, so much uncertainty. And cattle prices there are pretty high at the moment. You're getting $4.20 for a kilo.
It does feel like agriculture is at the forefront of this sanction sort of pain threshold, whereas energy and other things are clearly in the space, but they're a bit back from the front of the cliff face. Whereas agriculture, particularly Canada and America and so forth, it seems to be very much they're the ones that are on the phone screaming. Let's go to the survey question, which is tackling some of this key point of how long will it take for Trump administration to successfully close down Iranian oil exports under maximum pressure campaign? Close down, maybe not 100%, but ultimately to something that looks similar to what it was a few years ago when he was first in office. By end of Q2, which of course we're coming on to the end of Q1 now. So this sort of maximum pressure thing has only really started in the last few days, at least in its overt ways. By the end of Q3, the end of the year, or they will fail. The U.S. administration will not be able to succeed in its compression. So welcome your thoughts on that. Andy, just to pick up on that point that was mentioned in the earlier commentary, and again, looking at Iran, there is this letter that has been sent by the U.S. administration, apparently, to the Tehran leadership about coming into line on its nuclear program. Is this kind of another sort of crying of wolf? Is this time, is it different? What's your reading on where we're going? I mean, last year we were sitting on the doorstep of Israel and Iran on a full face-off regional war. That's sort of receded quite dramatically since the ceasefires in Lebanon, and now Gaza obviously is back in massacre time for the Israelis again. But what about this situation with Iran and the US now?
Well, if you look at the circumstances that surround that relationship at the moment, you have, OPEC still sat on, significant amounts of spare capacity, which gives the US a large amount of headroom to act now. the events of the last 2 years have shrunk Iran's influence in the region, the wider region. So Iran, if you look at the headlines, is probably at its weakest that it has been, arguably over the last 20 years, actually. And if the US administration had a moment that it wants to act, probably now is the time, which is where I kind of come back to where we started this conversation, which was around the visit of Sheikh Tahnoon to see President Trump. And remember, Sheikh Tahnoon is not, he's not a world leader. He's a very important part of the UAE government, but he's not a world leader. So it's quite extraordinary that he sat down with the commander in chief and the president of the United States. I can't.
Well, Conor McGregor did, so I mean,
Well, yeah.
There's not a high bar there.
Yeah, that's a very good point. Maybe the two things are linked. So the window is definitely open to something more happening here, and I think that these sanctions that have been imposed, on the teapot refineries in China is possibly an indicator of more to come on this story.
Brian, just circling back to some of the earlier comments, as mentioned there, and these two big meetings that happened in Washington this week. I mean, there's been a few and maybe more than two, but we had the meeting that Andy's referring to there with the chief of security from the UAE, but also we had the American majors, the top tier of the US oil and gas industry CEOs meeting with him. They were, of course, big backers of his. And we had Ham, the very closest of CEOs in his space, saying that shale patch may start having to close at these falling prices. So my question ultimately is, rock and a hard place here. Higher or lower oil prices is his biggest North Star. Lower, every president seems to be committed to gasoline at the pump being less as is possible. But here we have a sort of rock and a hard place with an industry that he is actively indebted to, if one uses that phrase, but ultimately very close to, who need a higher price. Where do you think he falls on that?
So I do think if you go back in time to the financial crash of 2008, one of the key North Stars from an economic basis for the United States that offered a recovery for the United States was in oil and gas, because that was when shale revolution really took off.
It went from 5 million barrels a day to whatever it is now, 13, knocking on 14.
Completely. From 2008 to 2014, there was this massive build out, and then they got better and better and better over time. And one of the interesting things that Trump had and said in his first presidency is he said, I always thought low gas prices, but the economics have changed. We have so much of the economy now driven by exploration and now exports, because if you go back a decade ago, we did not export LNG. We did not export crude oil. And now we export both of those. Now we export crude oil, lighter crude oil, and import heavier crude oil.
Thanks to Obama.
Yeah. Yeah, you had to weave that in.
Well, it's true.
No,
right? That great Democrat who greenlighted.
I just laughed because everybody.
No. Well, I think it's important to always remember when you get this bashing, like, oh, the Democrats are bad on oil. Meanwhile, Biden and Obama was incredibly generous.
Absolutely. As a matter of fact, Obama and Biden ushered in a lot of great policies for international commerce when it came to energy. The one misstep was actually Biden's LNG pause. But I would say that Trump is a little conflicted right now because he wants low prices at the pump, but high prices for all the economic engine, because Harold Hamm is right. At these prices, we haven't seen an expansion since we first started talking, since I first showed up on your podcast a year and a half ago, or whenever that was. But we haven't seen rigs come back into play. We've gotten more efficient, but that efficiency doesn't compensate for the number of rigs that we've dropped. So I'd say his North Star is changing, and with the meeting this week, and with the fact that there's so much underlying the economy in oil and gas, he is changing his North Star because it is still relatively pretty. And Peter and I were talking about it before the call. It's still pretty low at the pump. So it's not too bad as inflation, as eggs and milk and everything else has gone to the moon. Gas at the pump really has not skyrocketed, and that's a
For 40
function of oil
years.
prices. Yeah, absolutely.
Peter, last word for you on
Yep.
this, and no better man to give us your sense of, the biggest story amongst all of this noise in recent weeks has to be the collapse of the stock market. Not collapse, I mean, it's a big word. They were at meteoric heights and have sobered
Yeah.
up a bit. But within it, of course, some signature names like Tesla and the big, chosen seven. Your thoughts on where the intersection point of this sort of Trump policy period and the equity markets. Again, we thought a North Star of his was to be, the S&P 500 was like his scorecard. It appears,
Sure.
at least for now, it's not. Where do you think that's going? Is this a healthy buying moment, a buy on the dip scenario?
Well, it is in some ways, Sean. There's no doubting that. It's a lot cheaper today than what it was 4 to 6 weeks ago. So you can't argue with that. You've got a Dow sitting just under 42,000 and we had a high of 45. You've got 6,150 for S&P. You're running at 56.60. So it's certainly cheaper. But are you going to see continued downdraft? That's not a good sign from where President Trump wants to be. As you said, that's his economic scorecard in a lot of ways. Is the S&P or the Dow. Nasdaq's been hit pretty hard, and that's sitting at that 17.5 off from 20. So I think that we've just got to be conscious. What's going to happen with Fed policy? I don't see there being an interest rate cut in the second quarter, but I might be wrong. But hey, I just don't think it's going to happen. So there's the first part. Second part is if inflation does have a more of an attack to the upside, as the likes of Bank of America or University of Michigan are saying, then that's going to be concern from Fed policy. And what's going to happen to bond yields? So all of this goes into and US dollars, Sean. You can't take your eyes off that. It's off 6 or 7% in the last 6 weeks. So all I can say is watch this space. I think volatility is going to be the name of the game for Q2. And I just want to see how the April 2nd tariffs are introduced and how they're unpacked, because Brian said it, Andy said it, a lot smarter than me, and you've said it. It's unknown territory.
Well, I think one of the more interesting headlines on our digest today is Tesla's gamble on MAGA customers won't work. It's sort of the salesman president of showing off the Tesla on the front garden of the White House last week that try in some ways to bring Tesla to the MAGA masses. And in the same week, we get the headline that BYD has brought out a technology that can charge a BYD in 5 minutes. I mean, I used to be able to throw a stone out here and hit a Tesla every now and then, but you could not throw a stone out here without hitting a BYD. Close your eyes, throw it; they're everywhere. And there's no wonder, because they're incredible cards and they're cheap as chips. So that's the crack. Where will Tesla go? Okay, we better get off the air here. Andy's boss is going to give me an email. They will fail by more than 0.5% of this room, thinking that despite the maximum pressure, they won't get there. All together now, happy birthday
to you.
Happy
birthday to you. Happy
Oh, there they are.
birthday,
Look
go
at that.
Fidelity.
March
There
23rd.
it
That's
is.
what it was.
It's
Jeez, you're
Andy
much
and
younger in
Omar.
Hampson those days.
5 years went so quickly, Sean.
Oh my God. What do you mean 5? We've been doing this together for 25.
Yeah, exactly.
All
Yeah,
the best,
yeah.
guys. Happy weekend and thank you. Cheers.
Thanks so
care.
much.
God bless. See you
Thanks,
guys.
Sean.
Bye.
Bye.